Is it time to get rid of the stress test, making housing in Canada more affordable for first-time homebuyers? Let's chat about it. Hey there, and welcome back to Prairie Real Estate. My name is 𝗳𝗶𝗍𝗱, real estate agent in Regina, and that's not my trusted assistant, Matilda. She looked at this week's script and went, nah, I'm going outside to play instead. This is the weekly news recap where I give you my thoughts and opinions on what I think are the most interesting Canadian real estate related news topics. We're going to be talking about the stress test, of course, and a few other awesome things, but we got to start this off with another one of my terrible bad dad jokes. How do prisoners communicate in prison? With cell phones. If you have a terrible joke I could use in a future episode, put it in the comments below. Let's get in this week's Canadian real estate news. Let's start off by talking about CMHC's housing starts report. Of course, if you're a regular viewer, you heard me saying for a long time now, the housing starts are trending down, and yet now the government is bragging that housing starts are up 16%. Clearly, I've been lying to you the whole time.
Mr. Speaker!
What they conveniently leave out amongst all of their bragging is that is June to July numbers, not year over year, which continues to trend in the wrong direction. And of course, housing starts is not housing completions. Look how many projects have stalled out just around Toronto recently. Nobody's living in a start. We need to be tracking completions, which CMHC obviously stopped doing back in 2022. And not only do we need to have more completions, more houses being built, they need to be the right type. A 400 square foot bachelor suite in Toronto is probably not going to work for a family. I talked about it just a couple weeks ago in my August 11th video, which I'll link up there if you haven't already watched it. Description, or in the description as well, it'll be there. But we're seeing in Ontario, for example, we've got one bedroom, not house, for every 3 to 4 people coming to Ontario right now. That's just not going to cut it. As always, the lowest mortgage rate may not be the best mortgage available, and a company like 𝗳𝗲𝗿𝗁, which has fantastic mortgage rates, it's only available in Ontario, so I've tried to present this with options that are available to anybody across the country, but they do vary by province. So not perfect here, guys, but this will give you an indication where things are going, and really not much change this week. We saw very little movement in rates up or down. But you know what I learned? I didn't even know this was a thing. If I say the word subscribe, that button down there actually has this little cool animation. Here, watch. I'll do it again. Subscribe. I think it's cool. Okay, one more time for good measure. Subscribe. Okay, now let's talk about mortgage rates. Starting off with insurable mortgages, the best 3-year I could find was through Radius at 4.59%. The best 5-year was through MCAP, 4.44%. The best 10-year, 𝗳𝗍𝗿 is one of the few that offers a decent one, 5.6%. When it comes to the variable rate mortgages, CMLS at 5.65% was the best rate that is adjustable, and the best static variable was 5.55% through Manulife. With uninsurable mortgages, the best 3-year was 5.09% through CMLS. That is a very small drop from last week. The best 5-year I could find was 4.84 through Manulife. Again, a very small drop from last week. Best 10-year again, 𝗳𝗿𝗿, 5.6%. When it comes to variables, 6.2 through MCAP, that's adjustable. A static variable, 5.99 was available through TD. When it comes to the big 5 banks, these are the best rates I could find. 5-year insured, 4.64 through CIBC, unchanged. BMO 4.84, also unchanged. TD 4.84, that is just slightly down from last week. RBC 4.94, unchanged, and Scotia 6.59%. Putting that into context for how much those monthly payments would be, if you go through the best 5-year mortgage through 𝗳𝗍𝗿, your monthly mortgage payment on a $500,000 is about $2,700 a month. And if you decided to take that Scotiabank mortgage, well, you'd be about $3,400 a month for the same house. So that's about a $700 difference once again. Next, let's talk about Canada's inflation rate, because Stats Canada came out with new numbers. The headline inflation was 2.5%, which was exactly where the experts were anticipating it was going to be. It also marks the 7th consecutive month inflation has been below 3%, which of course is the upper end of the Bank of Canada's target range. The core metrics, which is what the Bank of Canada really is focused on, that was 2.4, again trending in the right direction. In my mind, this paves the way for a cut coming September 4th from the Bank of Canada. And now we're hearing some chatter that not only is the Bank of Canada going to cut rates, we might see the US Federal Reserve also cut rates. They have a meeting in mid-September, and even more chatter I've started to hear people talking about not only is Bank of Canada going to cut rates in October, but it might be a 0.5% cut coming. The other thing I'm starting to see people talking about is the Bank of Canada going to have to cut rates even faster? David Rosenberg, of course, very famous economist here in Canada, is saying that he thinks the Bank of Canada needs to cut rates significantly faster, because if they don't, we're going to see inflation hit 0%. And this is a whole different video topic. I'm not getting into it, but that would not actually be a good thing. We don't want to see 0% inflation, or even worse, deflation. I understand from a consumer perspective why you'd want to see prices coming down, but from a government economist perspective, that's really not a good thing. Again, that's a topic for another video. As I always do, I'll have a poll coming out, and this one's coming out August 28th, where you guys can vote. What do you think the Bank of Canada is going to do in its September meeting? Is it time to ditch the stress test in Canada? The stress test was initially brought in 2016 and applied to all insured mortgages, and then was expanded to all mortgages in 2017. The stress test required borrowers to prove they could pay interest rates 2% higher, or the stress test qualification rate, which was currently, or is currently, 5.25%. Whichever of those was higher, the borrower had to prove they could pay those higher rates, because the expectation back in 2017 was that interest rates were going to continue to climb. They wanted to provide some stability to the real estate market and not have a large number of borrowers default on their mortgages when they came up for renewal and interest rates were higher. The impact of the stress test was it reduced a buyer's borrowing power, thus their purchasing power, by about 15%. And if you look at the Toronto-Vancouver price charts here, you can see that there is a noticeable drop off in home prices immediately after the stress test was implemented. Of course, this is partially because it does reduce their buying power, but also it put a big shock in the market, and that slowed things down for a short period of time. If we were to go and remove the stress test, to take it away, that immediately would return that buying power back to those buyers. And I expect you would see a similar inverse result to what we saw in 2017. More buyers would be able to purchase more, and that would probably result in purchase prices going up. Now, it's interesting because there's a conversation that's being had that the stress test shouldn't be a one-size-fits-all model, and maybe in certain markets there should be a lower or no stress test at all, and the reverse in maybe more hot markets. And why I find this funny is because when the stress test came in 2017, this was the exact conversations we were having here in Saskatchewan, Alberta. Our markets were very slow, and we saw the stress test immediately hit our markets and slow us down even more, knowing that this stress test was more put in place for the Toronto, Vancouver markets, but we felt the side effects of that policy change. And now we're seeing people say, well, in Toronto, Vancouver, we should remove the stress test because it'll make it easier for buyers to be able to afford houses in those markets again. Just funny when the shoe is on the other foot here. Personally, I think in hindsight, this was a really good policy change. At the time, it had a significant impact on my market and my business. We saw both of those drop off, but we've now seen with the Bank of Canada raising interest rates basically 5% in 18 months, how much of a good policy decision that was, because we have not seen this big wave of foreclosures that was maybe anticipated. And of course, some of that is due to the stress test. Buyers were required to purchase a smaller home, take on less of a mortgage. We haven't seen the full impact of these higher interest rates because not all homeowners have renewed into these higher interest rates, but we still haven't seen that big, massive wave of defaults that potentially could have happened without this stress test. And I know there's bargain hunters of you out there going, well, I would love to be able to pick up those foreclosure houses on great deals. And I've done a video on this before, that bank foreclosures aren't always great deals. I'll put a link to that right there. And of course, always in the description below. But in a market where we see a big wave of foreclosures, that's not a good real estate market. That's not stable. Just the same as if we see prices shooting up, massive year-over-year increases, that also isn't a good, healthy real estate market. We need a market that has stability. If you had the magic policy wand, you could immediately remove the stress test, what would you do? Would you remove the stress test, or maybe would you change it and make it even harder? Let me know in the comments below. And then here is that foreclosure video, so you can check that one out. As always, please give this video a like if you like this video, subscribe to Prairie Real Estate, see the little animation thing again here. And as always, thanks very much for watching.